Hello, this is Steve Nissen. Welcome to your special bonus for the DVD workshop Profiting in Forex Using Candlesticks to Catch the Next Move. The Japanese have a wonderful proverb: to hear it told is not equal to experience. And this is where you get your experience. This bonus session will have interactive Q&A charts, we'll have case studies, and we'll have slides. I'll say, for example, what would you do next? And this is a great way to really test and refine some of the critical aspects you learned during the entire DVD workshop. So let's move on to the first one. We have three potential reversal signals here. What are they? And what I'd suggest you do is think about the questions. We'll have a little sign like this that'll come up, and you could hit the pause button to think about the answer. When you're ready to hear me give my answers, just resume the play of this DVD. So what I would do now is pause now. Okay, so let's go through the answers. Okay, we have a doji. We'll discuss the bearish harami in a couple of minutes, but a doji is when the opening and closing are the same or nearly the same. Remember, in the Forex market, as discussed in the DVD workshop, even if there's a small real body, the Japanese call a small real body a spinning top, even if it's very, very small, we would view it the same as doji, because different charting services, one might have a doji, another one might have a spinning top. So I equate a doji and a very small spinning top as being one and the same. So here we have a doji, and a doji tells us the prior trend is running out of steam. What was the prior trend, the immediately preceding trend? That was correct, up. Okay, remember, when we talk about a potential trend reversal, we look at the immediately preceding trend, even if it's only 3, 4, or 5 candlesticks. And with the doji, the Japanese would say that the market is tired. So the first one is a doji. The second one is a bearish harami. And a bearish harami is a small real body within a long real body. So here, obviously, we have the doji within the long white real body. This, by the way, is called a harami cross, if it happens to be a doji, but I just normally refer to it as a harami. So we have the bear harami over here. And the last, but certainly not least, is the bearish engulfing pattern. That's when a black real body wraps around a white real body. And remember, in the Forex, even if the opening of the black candle is the same as the prior close, which it'll be very often because the Forex is a 24-hour market, this is still fine as a bearish engulfing pattern. So here are the three. And actually, another one we can think about is a resistance area. Now, one of the things that we could do with doji is we could make the high between the doji and the prior candle potential resistance. So which has the higher high? Over here. So we make a horizontal line. And although the market pushed above the red resistance line, did it close above it? And the answer, of course, is no. So we could add that as another signal that potentially the market was running out of steam. And also, of course, just like with a bar chart, everything we do with a bar chart, we could do with a candlestick chart. The market was going from higher highs, right? And so we're going from higher highs to about the same highs. So we see the bullish strength is losing momentum. Okay, over here, what are the three candle signals at 1 in that red semicircle that are hinting the bulls are losing momentum? And there was something else that warned the market was stalling at this area 1. So once again, just put the player on pause, think about the answers, and then resume when done. Okay, so let's go through these. What are the three signals at 1? Okay, first is a spinning top. And the spinning top is at small real body. Okay, to me, it's almost the same as a doji. This is very similar to the prior chart, correct? With the small real body that was so small that was a doji. So we have the doji telling us the immediately preceding trend, in this case, was higher. Okay. By the way, some of you may recognize this signal here. It looks like a dark cloud cover. Just to refresh your memory, a dark cloud cover, the market's ascending. Then we have a black real body that gets more than halfway into the white real body. This did not get more than halfway into the white real body. If we see something like this, where it doesn't get more than halfway into the white real body, normally the next session for confirmation, I'd want to see a close under the middle of the white real body, and obviously we didn't get this, so this was not a dark cloud cover. So here we have the spinning top. Okay, there's a tug of war between the bulls and the bears, so the trend is going from up to a little bit more neutral. Then we have the doji over here. And, of course, very similar to the prior one, small real body and a big real body. This is a harami. So we have three potential signals here. Now, what else warned that the market was stalling at area 1? a resistance line. All the highs were exactly the same. So we had a grouping of signals, the spinning top, the doji, the harami, and the resistance line. As mentioned here, resistance. Now, what is the candle signal here at 2? And again, think about this for a while. And anything else to get us nervous. So what I would suggest you do is, once again, pause now and resume when done. Okay, so the candle signal at 2, you all should get this. This was a shooting star, refresh your memory, very long upper shadow, small real body at the bottom end of the trading range, and it's okay to have a very small lower shadow. So this real body, by the way, could be black or white. So that was one of the answers. The candle signal at 2 is a shooting star. And what else would get us nervous? Now, think about this. Wasn't this a resistance area? Remember we talked about resistance over here, right? But the market got above resistance. Well, if you remember on the DVD workshop, one of the things we discussed, one of my favorite Western charting techniques, is when the market breaks above a clean-cut resistance area, and this certainly was a very obvious and very exact, it doesn't have to be, but there's an exact resistance area where time after time the market stalled near 194.50. One of my favorite bearish signals is when the market breaks above it and can't hold above it. Remember, that was called a falling off the roof. So here, the market pushed above resistance. Now, if the bulls really had control of the market, they really should have maintained the pound above this resistance area, and they couldn't do it. This was their shot, and they failed. So this was a failure to hold over resistance, a false breakout, what we call a falling off the roof, and that was a very, very great short sale. So we had such a confluence of indicators. We have the spinning top, the doji, the harami, the shooting star, the failure to hold above resistance area, and this is what we want, a grouping of indicators. So these all combine to give us a great short selling opportunity. Okay, moving on. Now you'll see this is case study 2, part 2. Okay, the first slide discussed previously was case study 1. And now we're going to be looking at part 3. This is the same slide. So, is 3 a hammer? Okay, again, think about this. Definition of a hammer. Okay, the answer is no. The upper shadow is too long. If we had a very small upper shadow, that would fit the definition of a hammer. So 3 is not a hammer. But although it's not a hammer, what pattern does 3 complete? And think about that. I'm not going to put the sign up that says, pause now. Just think about it for a second or two. Okay, it's a bullish harami. This was a bear harami.